Good morning, everyone. Welcome to our Thursday morning trading session. What a roller coaster the NASDAQ has been. Well, the stock index in general, but the NASDAQ is the one that I tend to be following. Just craziness. Let's take a look here on the Eagle. It kind of will give us a Reader's Digest view of everything that's been going on. So yesterday, as you know, the market a little bit on the choppy side. Prices did top out, kind of get this test of the extreme right here. A nice rule of three. The market falls, tries to recover, and by the end of the day, it looks as though the bulls have full control of the market and prices will once again slip lower. Ha ha ha, not to be, because then the Asian and the European sessions open and they rally the market hard. They actually topped out here near 46.10, but are opening around, 45.90, 4600. Huge rally through the overnight. So we've got this enormous opening gap below the market right down here. And I don't know. It is a tough call to say whether or not the market's going to try to get into that gap or whether it's just going to keep powering on from there. So I think we're going to have to give it a few minutes here for the dust to settle. You see, Trade Forecaster says we are in trend mode for the better part of the next 2 hours, or just over 2 hours. I guess what we could do is we do have a soft edge sell here on the Raptor. I'm going to throw in a onesie. It's very late. Oh, you know what? They may bounce here. I might get a second chance. We'll see if they come back and if I can get into that on a limit. I don't normally recommend doing this because what could happen here, see, I could already have my trade near break even or certainly roll my stops tight. This is very risky what I'm demonstrating here, and it's very early. You know what, if I were smart, I would stick with my first plan. Even if the market falls off the map here, we should get another chance. What I was looking at, though, was this soft edge sell. The soft edge sell occurring right here. We have this little failure, the market producing a signal. Now, normally, we anticipate a retrace to the hard edge. Can't show you a very good example. There should have been a soft edge sell signal printed somewhere around here. I guess prices just fell off a little too quickly. Signal produced right here. It would have been a very difficult signal to take because no obvious retest of the high. The soft edge sell or its counterpart, the soft edge buy, must always be preceded by a test of the extreme. So in this case, the extreme is the high right here. Here's the retest, the failure. Here's the signal. And we would be looking, as I said, the target is usually the hard edge of the band, but since we're at the band already, we would just be looking for a little bit of a drift, a little bit of a follow through there. But it's too early to do something silly, so I will avoid that. Oh, instead, we get a real first micro macro cross here in the hawk. The hash mark's going to be right here at 45.85 3/4. For the extra tick, I'll enter below the low. I'll still enter below the low. And what I'll do is I think we're going to put a runner on here today. It just seems to be that kind of day. Okay, so there's the signal. All right. We'll take take it on the hash mark. We'll cover on the high. All right, there they go. They're pressing the lows. Let's put our break-even trigger just on the other side there. Working a possible trend change signal here on the Falcon, working a possible, well, it's a very premature cloud crossover here on the Raptor. All right, here they come. It's a very early cloud crossover. I need to anticipate that the market is still going to try to react here somewhat. Especially as it gets closer toward these lows, we can expect a little bit more of a reaction. All right, well, I've got two warning dots. I know that if this one finishes on the low, it will produce a hash mark. Ditto here for the Falcon. And it's the same kind of mess we're looking at with the Hawk. The market is still sideways. We need some real follow through here. They're trying to get through the bottom. So we've got this support line here to deal with at 45.80 half. Okay, well, we're loaded up on the short side. There we go. So I've got my ATR stop working there, and we're short on the Falcon, and the Raptor just waiting to get filled on the Raptor. Good morning, Jim. Jim says the advanced decline numbers are just over 2,000 on the buy and just over 600 on the sell. But don't forget, we have that huge opening gap. Did I mention it was huge? All right, so we are loaded up across the board here. Here comes the cloud crossover now. So the cloud's crossed over. We expect the market to move into the cloud. We expect the cloud to spit the market back out. Now, if it does bounce the market back out, that's going to be a much better signal for us. I'm not liking this rejection near these lows. So this is kind of the last chance for the buyers, or pardon me, the sellers, in my book. If they can't pull it together now, then I'm going to start getting really aggressive with my stops. Come on. Just holding this low here at 45.83. Come on. There you go. You can do it. All right, so we got stopped on the reversal here on our hawk trade, but we did manage to hit our scalp target and our break even, so no harm, no foul, I guess. We're working too hard for these other two trades, for our Falcon and our Raptor trade. Here, we'll watch the Raptor. Not liking this dial pulling over to the buy side like that and sticking. Not liking that at all. There we go. That's what I want to see. Here, we'll pull this over. Sometimes you can move it manually. There we go. Oh. Yesterday, the market just opened and fell like a rock. I was kind of hoping for the same thing to happen today, but not yet. We're just going to have to try to nurse this along a little bit. Yeah, not liking them holding out here at 45.83. Not liking that at all. Crude oil starting to tail off a little bit here on crude on the Eagle. We have a very teeny tiny rule of three. We've got one signal, we've got two signals. I suppose you could consider this one as well. Normally I don't like to see them that far away. The whole idea of the rule of three is that the market is starting to break down, so we usually see it, 1, 2, 3, that kind of ideal. But it's okay just to have two signals. Why? Why is that okay? Well, because we've already had a retest, right? A rule of three, like the soft edge buy and sell on the Raptor, the rule of three has to have a test of the extreme before it becomes a rule of three. Now, sometimes you only get two signals. Sometimes you'll get four. I don't think I've ever seen five. The problem with the crude oil trade taking it off the second signal is you need to think maybe there's going to be one more retest. Therefore, the best place to cover that trade is above there, and unfortunately for me, Trade Manager will not allow me to do that, at least not at 2%. but there was also a first micro-macro cross in the hawk here on crude, right here. Nice little first micro-macro cross, and that would have been a little easier to cover. Could cover that above there. All right, our Raptor trade drifting low enough that we've hit the break-even trigger. Let's see, have we tagged the break-even on the Falcon too? Yes, we have. All right, so what I'm going to do is I'm going to enable a different stop strategy. We'll go with the ATR stops on the Raptor and the Falcon. Oh, I guess I was just running a single on, I thought I had a runner here on the Falcon. No, of course not. Just hit the high probability target. That's what happened. Okay, so we hit our target on the Falcon trade. We still have a runner here on the Raptor. We're sitting at break even. We've hit the first target, and we're just seeing more and more bullishness trying to come into the market. They don't realize that they're supposed to be heading lower. The advanced decline starting to tail off a little bit. Jim says from that original 2,000 to 600, it's fell off now to 1,900 to 800. So 1,900 on the sell, 800 on the buy. On the surface, it's still very bullish, but relative to where they started, it's become more bearish. It's almost looking like we're going to get a little bit of a hiccup here. See, the Geiger counter just keeps pulling. It's very active. My goodness, we haven't seen it this active for a while. Way to go, Jim. Jim says he had a nice oil trade short at 72 on 2 contracts for 30 ticks. Well done. Yeah, I don't know. Jim's comment here, market is overdone. We need a fade. You know, I had a very good trading friend who always used to say the big money is on the surprise side, meaning whatever you think the market's going to do, it's usually going to do the opposite. And he was right. Yeah, I agree. Jim says we've got all these gaps higher, and what he's referring to is the last, well, I guess almost the last week of trading, where on every open, the market has had a big gap. Sometimes, I think yesterday's gap filled, but a lot of these gaps are still out there. And the market, for whatever reason, tends to fill gaps. And let me see if I can demonstrate this for you on a chart. There we go. So here's a daily NASDAQ chart. And you can see yesterday the market filled its opening gap. Let me make this a little bit more obvious. All right, so here's the last, I guess the last 2.5, 3 weeks of trading. You can see, look at all these gaps. There's a gap there, didn't get filled. This gap did get filled. Here's a little itty bitty gap. Here's a gap. This gap got filled. But we've got all these gaps that are sitting below the market that are not getting filled in. And there's a tendency for the market to fill these gaps. Now, sometimes it takes a while. You see this gap back here, which occurred early in June, just got filled now. So it's been about a month. This gap here and this gap down here filled a little quicker. This one filled within a couple of days, and this one did not fill for about a week. But the fact is, you can go through your charts and you can find these little gaps, and when the market starts to slide, you can look at these gaps as profit objectives. You can say, oh, okay, the market's topping out. Where's it going to go? It's going to head down to this gap around 4,300. And that was one of my profit objectives when the NASDAQ started to tail off. So Jim's suggesting we've got all these gaps up. If the market turns, it's going to try to fill in some of these gaps. And I agree. How long will it take to fill this gap here at 43 again? Anybody's guess. But that's what he was talking about. Or I think that's what he was talking about. Daniel's asking, do you agree in taking another short in the NASDAQ? Well, I think we're probably have another selling opportunity, but right now we are doing a little bit of a hard retrace. So we're here now into the cloud. There wasn't a whole lot of momentum on the downside. They weren't quite as brisk as I hoped. Sometimes you can get a little bit of a feeling for which way the market is wanting to go just by how the bars are unfolding. You know, if you're watching the bars and they're going boom, 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 you know, just one after the other, then you can have a pretty good idea that the market is very intent on heading lower. But when it's producing a signal and it's struggling, and look at the width of these bars. Compare it to the width of these bars. Now I know this is the overnight volume is less anyhow, but you'll notice that when the market is trending well, the width of the bars is relatively thin. The markets actually trend on relatively light volume. Look at the width of these bars. There's a lot of resistance to the market heading lower here. There's a big struggle going on. Now we've got, essentially we have a double bottom. We're bouncing off 45.80 half, that's our resistance line. And our trend line is starting to change. Our filter is already out of sync. So the bears have some work to do here if they're going to recover this market. Otherwise, we'll see about taking a buy signal. Here's the macro pullback signal on the hawk. The problem here is, where am I going to cover the trade? It's a quality signal, yes, but where am I going to cover it? If I leave it right here, well, that's a little cozy. This structure, this resistance here is a little better because it has this support to coincide. The crest in the macro line would probably be where I would go, and if I could afford it, I'd go back above the high. Because the market may need this much room before it can make another press lower. It may try to challenge the highs one more time before it actually begins to fall. So if you're in that macro pullback trade, you don't want your stops too terribly tight. Yeah, it could be. Jim says, I've got a trader saying that the SPX is going to 2400. I'm not much for predicting. Oh, okay. I misunderstood Daniel's question. Dan was asking, sorry, my question is how to avoid the last signal on the hawk that should touch the stop loss. All right. So we're concentrating on our high probability signals, namely the signals for the hawk. Where did I put it? Here it is. Namely, we're going to be concentrating on these types of signals, right? These are the signals that we're going to be focusing on because they are our highest probability signals. So things like the first micro-macro cross, macro pullback, 4-arrow consolidation, post-consolidation, red bar buy, green bar sell. And Dan, if you don't have this cheat sheet, email me. I'll send it to you, or you can get it at the members area at the Indicator Warehouse site. So, looking at the high probability signals, we had a first micro-macro cross right here, and then we're kind of in limbo. When the market starts to reject going lower, now I'm thinking macro pullback or 4-arrow consolidation. So I'm waiting, and now I get the macro pullback signal. So now Dan's asking, how do I know this isn't the last signal? Well, the trend currently is down. We've got one of our high probability signals going. The struggle with this trade is not, is the market going to head low enough to hit our high probability profit target, which is only down here at 45.80. That's not the struggle. The struggle on this trade is where am I going to keep my stop? Another member wrote me just the other day with a similar question, and I think it was Michael, but I don't remember for sure. Michael was asking about a macro pullback trade that he took. He said, how come it stopped me out? And my first question to him was, where was your stop loss? Because if your stop loss is right here, the reason you got stopped out is your stop loss is too tight. If your stop loss is up here and you get stopped out, well then it was just a bad signal. As good as the DTS system is, unfortunately, it is not 100%. So if you take a trade like this and you leave a stop above a swing high, that is the highest probability trade that you can set up for yourself. The chance that the market will hit 45.80 before it hits 45.96 is very good. Now, don't have a coronary because you're seeing your stop way up here. Remember, your risk manager is always going to keep your dollar amount relatively the same. So I'm risking 2% of my capital. Trade manager says if I set up a trade this way, it's going to cost me $265 if I'm wrong. Now that's $265 if the market makes a beeline up there, stops me out, never gives me a second chance to adjust my trade, which is extremely unlikely. However, what I'm trying to do at this stage because I'm with you, Dan. I don't know. Is this the last signal? Is this the last move to the short side? I don't know. But what I do know is it's a high probability signal, and I don't want to get stopped out before the market has a chance to reach my profit objective. So I need to keep my stop as far away as I can afford. Or if there's some structure, let's say the market made a decent retest of the high here and then fell down and came back with a macro pullback, well, then I put my stop up here, right? Because this is where the selling resumed. This is where the sellers got busy. I can't say that for any of these little hiccups that we have on the way down. I can say that for this up here. I can say, yeah, 45.96, that's as high as the sellers allowed the market to go, and then they gave it a serious push to the short side. So now I'm short. What do I do? Well, now I need to see where the sellers are going to dig in again. Now I've had 1, 2, 3. Oh, I didn't get my 4-arrow consolidation. I did get the warning dots, but I should have had a sell signal here. This signal right here, the sellers should have followed through, but they did not. So now I'm thinking, all right, maybe I'm on the wrong side of this trade. We'll follow it a little bit further. Now we're into green bars. And this trade may still end up to be a loss, but it's very unlikely I'm going to take the full loss at 265. So now I'm looking for the sellers to come back into the market. How do I know the sellers will come back into the market, class? Can anybody tell me? Can anybody tell me how do I know the sellers will try to push this market lower? One more time. I know I'm kind of dropping this one on you a little bit. I have touched on it in other sessions. But the sellers owe me one more move lower. Yeah, there you go. You guys got it. The sellers have to retest the low. Right? We've got a low down here. Now, in hindsight, it may turn out that this little hiccup here is the retest. But generally speaking, the sellers have to retest the low before the buyers fully wipe out the sellers and the market heads higher. So there's going to be one more move lower here. That coupled with the fact that that the NASDAQ took out a decent area of support here. We know whenever a reasonable support or resistance area gets violated, the market tends to give us 2 moves in the direction of the breakout. It's not carved in stone, but that tends to be what happens. Sometimes we get more moves, sometimes we get fewer. But to my way of seeing this, we haven't got a second move lower yet. Okay, so we're waiting. When we see the market try to resume the trend lower, then I'm going to take my stop and I'm going to roll it down. Now remember, worst case scenario, this is my safety net. Worst case scenario, I've capped my loss at 265, and yes, it is unpleasant, but it's not going to harm me. It's not going to wipe me out. And here's a piece of advice as well, which is unfortunately much easier said than done. But you should not try to think of this as money. The most successful traders tend to treat trading more like a game, and the money is just a way of keeping score. When you get attached to the money, you're going to lose the money. That's why you should never place a trade with more money at risk then you can afford to lose. Phil Ivey, the poker player, I heard him in a documentary once. He said that as soon as he thinks of it as real money, he's done. And if you've ever watched the World Poker Players, the World Poker Series and such, which was a lot more popular a few years back, but these guys are playing for hundreds of thousands of dollars per hand. But they try not to think of it as money. They're just chips on the table. Right? They've got to make rational decisions, and they can't let the money cloud their judgment. It's the same way for traders. You have to try to make a rational decision here. And if you're fretting over losing $265, you're going to be irrational. If $265 is too much for you, dial down your risk amount. If you're only comfortable risking $100, dial down the risk amount. If you're only comfortable risking $50, change your market. Look at the spider. That's the SPY. In fact, if you're only comfortable risking $100, you should be looking at the spider also. Because the SPY allows you to tailor your risk exposure. Here on the NASDAQ and the futures markets in general, the contract sizes are predetermined, right? So I'm trading one contract and the exchange says that there's so many dollars or so many pounds or so many bushels per contract. In the spider, you're trading shares. So you can trade 100 shares or 1,000 shares. So if you want to only risk $50 on this trade, you may end up trading 50 shares of the spider. Now don't forget, if you're trading 50 shares and that's only $50, you're going to need the market to move an equal amount to earn $50. But still, if the point of my little sidebar here, if you will, is that you need to be comfortable with the amount of money you have at risk. Note that the stop loss is only a loss if it gets hit. I am not in technically I'm in a losing position because I probably have about $135, $140 in the red right now. But it's not a loss because I haven't been stopped out yet. This is the point where I can say with a reasonable amount of certainty, I'm on the wrong side of the trade, I better get out. But we'll see here. We'll see how this unfolds. If the market, what I'm looking for is a little bit of a hiccup here. Because it's a first micro-macro cross signal, the market may try to get up, hit its high probability target, and then fall. If the first micro-macro cross signal does not trigger, I would expect the market to go back into a macro pullback. Maybe give me a little hiccup and then fall. If the market drifts a little bit lower and goes into a 4-arrow consolidation or a red bar buy signal, I would expect a little hiccup and then the market to fall. So I need to be cautious about how quickly I roll my stops. And again, if I'm anxious about the money, I'm going to start panicking. I'm going to say, whoa, the top is in. I better bring my stops down here. And I won't be thinking clearly that, hey, this is a first micro-macro cross. It may go up $50 and then the market fall down. Your objective in trading is to make money, not get stopped out early. Oh, Jim says the DAX is going vertical. All right, well, we may, like I said, I may well be on the wrong side of this trade. It's an acceptable loss, however, because I'm capping it at 2% of my capital. It does happen. It does happen. You can end up taking a perfectly legitimate trade and the market peel against you. And you can do everything right and still take a losing trade. Okay, so it looks like we probably hit our high probability target, and we'll see whether or not they flounder here, at which time I will start to roll my stop in. At least take a little bit off. Maybe instead of 265, I'll take a hit for 200, or maybe we can get it down here to 150 or something like that. It may well be that the best the market can do today is a sideways range also. Although I do tend to think that the market has turned more bullish. But look, no real signals. The market's just kind of plodding along. Here's the Falcon. If this doesn't look like a roller coaster ride. So we got a double dot buy signal. If you happen to get in early, I'm not so sure I would have, well, I don't know. That's probably as textbook a double dot signal as you can get. I don't point this one out very often because it is a counter trend signal. What's important with the double dot signal, so the double dot signal is when the market starts to produce all these dots, these buy dots in a downtrending market, or sell dots in an uptrending market. But you want them to be printing next to each other, or maybe with one bar separation, but certainly not like this, where there's 4 bars in between. This is not what I would consider a double dot. So that's thing number one. You need to have the dots printing relatively close to each other. Number two is you need to be able to look back in the history of the chart and say, hey, last time the market hit this price level, this is what happened. It's essentially like a double bottom, and you're playing it in much the same way. The only nice thing about it, because it's counter trend, is that you can cover the trade relatively tight. But because it's counter trend, I don't normally load up on it. I will go and maybe throw a onesie on it, because counter trend trades are inherently low probability. And in this case, the market did or is trying to duplicate what it did the last time. Rally up here to 45.96. So I hope my little detour there made sense, Daniel. Crude oil still fishing for a low. So we looked at crude oil when it put in these signals here. The cloud has since changed direction, the band. This is technically now our first signal, our trend change signal. Again, the problem I'm having with crude oil is covering the trade. Stop should go above here. I can't afford that. So I'd have to look at either the mini crude market or perhaps a signal on the hawk. We got a 4-arrow consolidation right here. Remember, with crude, you tend to only get 3 signals. 1, 2, 3, because crude likes to jump out a little bit early. Here was another 4-arrow consolidation, 3 arrows accrued, 1, 2, 3, boom, down she goes. All right, so it looks like I am going to get a full stop out here. I was hoping I would be able to show you where I would roll the stop in, but they're not allowing that, and I would have just got a full stop out. But really, I did nothing wrong. This was a valid signal. I had every reason to believe that the market should head lower. And I still believe they owe me one more move lower. Stinkers. And even though it was a loss, I can take a little bit of consolation in the fact that I didn't lose a bundle. You know, I contained the risk. That's so important. I know I start harping on that sometimes, but it's just I've seen traders do it wrong for so many years, and the solution can be so simple. Just don't lose more than you can afford. Oh yeah, look at this. They just broke 296, and now they're going to fall? Oh, let me at them. Here, Daniel's asking for the cheat sheets. If you guys don't have the cheat sheets yet, you can email me, and there's my email, eric@supportandresistance.com. Just ask for the cheat sheets, and I will get those to you. Yeah, look at this. The stinkers, the sellers are coming in now with a little bit more. We're going to be in a sideways range here today. I can almost guarantee it. See, if we look here at the eagle, we're starting to track sideways. The longer we move sideways, the less influence this leg of the trend will have on the market. You need to try to keep context in the back of your mind also. By that I mean don't ignore everything on the left side of your chart. Right? If the market's whippy like this, expect the whippiness to continue until it gives you a clear breakout. And by that I mean, here I'll show you on the eagle because it should be a little bit more obvious. So right about now, traders are thinking, we're stuck in a trading range. Best thing to do with a trading range is to allow it to break out, retest, and then look for that signal once you're out. Same thing to the short side. Let it break out, retest, and then produce that signal that we would look to short. anything within this zone is going to be pretty dicey. Buyers are going to try to buy down here. Sellers are going to try to sell up here. Anything in the middle, that's a toss-up. Well, here we go again. Are they going to behave themselves on this macro pullback? Same problem. Where do I cover this trade? I could cover it here, I suppose, under the macro line, but really the best place to cover is probably down here. Now, because I suspect the market is moving sideways, I should take profit on target. I will leave a runner in here, but just be aware that I would be better off taking my profit here at 45.94. That would be my profit objective. Possible late filter entry signal here on the Falcon, maybe, just maybe. All right, so let's try to work through this hawk trade now. See, they're rejecting the highs. They're rejecting the lows. That's why I think sideways range. Jim says you should try to put a fib level on that recent rally. I bet it's near 50%. Yeah, it is pretty close. Fib traders will be getting all excited. Come on. Come on. There we go. So just shy of 94. Oh, there we kissed our profit target. Kissed our profit target, then came back for a reversal. Tapped me out at break even. Stinkers. They're not playing nice today. Well, that's all right. Break even is not a loss, right? We do have a late filter entry signal here on the Falcon, however. We could do a second push on this one. When the market is moving sideways like this, a second push entry, not a bad strategy to follow. All the second push entry means is that I allow the signal to engage and then I allow the price to retreat from the signal. Then I use that bar as my entry bar, namely entering above the high of that bar. So let's see, are they going to press and make another move here to 45.96? That's the stumbling block for the buyers right now. Come on, let's go. Jim says it's a real mixed bag out there. The bank index and the Russell are lagging. The mini Dow, the transports, and the NASDAQ are all leading. So people are all wondering what's going on. Yes, option expiration tomorrow. That's true. That always spices things up a little bit. Oh, come on. Let's go. Don't mean to sound impatient, but I guess I am. The longer they lag here, the more difficult it's going to be for the trade. All right, come on. Let's go. The late filter entry signal, if I forgot to mention it, occurs when the filter goes out of sync and comes back into sync. The trend line itself never changes color. That's the key component, or the two key components. Filter goes out of sync, must come back into sync. Trend line, however, never changes color. All right, well, we'll put that on the shelf for the moment. Here, the Raptor gave us a cloud crossover signal, but it's, again, you got to kind of look at the overall context. Technically, yes, cloud crossover, no question. But remember, the cloud crossover usually occurs after a trend change. There's been no real trend here, at least not for the last couple hours, it looks like. So if we treated this as a second push signal, we would place our order just above the high, right there. So we allowed the signal to engage. We let the market retreat from the signal, which is what it's doing now. And if it renews some momentum, then we can buy in just above 45.95. Well, they are stuck. Geiger counter is swinging hard to both extremes and holding, so it's tough to get a handle on it. We're getting a little bit of a 4-arrow consolidation going on here with the hawk. It has a little bit of a pennant type shape to it, a little bit of a triangle. I guess it depends where you start counting. If you started here, 1, 2, 3, 4, your fourth signal was also this macro pullback. There we go. Come on, there we go. Here's a trend signal in the eagle. Now, remember I just pointed out that we were in a trading range, and I said the best course of action is to let the market get outside of that range and retest. That's the best course of action. If you wanted to try to trade the breakout, well, here you go. You've got the eagle giving you a with trend signal. In fact, for an extra tick, you could take it above that high. Good question, Paul. Paul is asking, Eric, would you consider rolling your stops yet on the Falcon trade? It's funny you should say that because, yeah, I've been looking at that and thinking, oh my gosh, should I roll my stops up yet? Yes, you could. You know, there's every reason to believe that if the market fails here at 45.88, it will probably head lower. I would love to see a clear breakout above this high. Then I would definitely roll here. If we can get, 45.96, 96 quarter, what's that high? 96 quarter. So yeah, if we can see 45.96 quarter, in other words, if this bar finishes bullish, definitely good time to roll the stops. Come on. You know you want to. There you go. 95 3/4, 95 half. 95 quarter. Going the wrong way. Come on. Give you a little push. There we go. 3/4, 3/4. Come on. Come on. Oh, you guys. Get up there. 95 quarter, 95. 94 3/4. Wrong way. All right. There we go. They're floundering too much, so yeah, we'll bring in the stops a bit. It's reasonable to assume the market should give us some follow-through off of the signal. And the longer it takes to follow through, it's not to say that it won't go our direction, but if we start to print a red bar here, then it's probably going to tank. In fact, with that logic, we could even go here below 45.90. Right? Because we have the seller's press here, we have the buyer's recover. If it fails at 45.96, it will fail at 45.90. Come on. Let's go here. We'll give you a nudge. Here we are, 95 3/4, 96, 96. Come on, 96 quarter somebody. Oh, well, topped at 45. There it is. There it is, 96 quarter. So good time to roll our stop. If not below here, 45.90 would be good. There we go. 96 3/4. Okay, there we go. Boy, we just had to work too hard for that one. Don't you dare leave me hang. You saw 4,600 in the overnight. You can do it during the day. Don't you dare. You see, what's happening here is our high probability targets always go off of the hash mark, right? So we have hit the high probability target. Because I postponed my entry, my profit objective is just a little bit further. I still think we're going to see 4,600 today. Right now, my question is, will I see 4,600 before the market retraces to 45.94? That one I'm not so sure about. Starting to see a little bit more rejection here as we try to get higher. It's just the whole momentum. You can feel it. It's, you know, we had a little bit of a move up, and now all of a sudden the buyers all quit. What's going on? Come on, let's go. Giddy up. No, doggone it. Sellers sold hard on this bar right here. The buyers are just holding them off, but we'll see whether they can continue to do that. I'm almost thinking no. Daniel's saying, Eric, my bars are all the same width. I'm running the indicator warehouse dynamic equivolume bars. This is an add-on. It's a system add-on. So the equivolume charting shows you the volume of the current bar, well, of all the bars relative to each other. So the wider bars have got more volume, and the narrow bars have less volume. So you see here wherever the market is turning. So we're producing a macro pullback signal, and we get a nice big fat bar like that. That gives us a little bit more confidence in the macro pullback because we know there was a lot of activity on this particular bar, right? The market always has a lot of activity wherever it turns. Here on the Raptor, you can see it. It's a little bit more obvious. So a lot of volume going through on this bar. A lot of volume going through on this bar. When the market is trending, however, volume tends to be relatively light. See here we tried to produce a soft edge sell, and I know that because of all the volume on this bar. Now if you don't want to get the dynamic equivolume bars, you can also run a volume chart. So you can just do your normal volume chart. And you'll also be able to see which bars tend to have more volume to them. Volume sometimes is difficult to interpret this way, whether it's rising or falling. Personally, I think it's a little bit easier to see on the dynamic equivolume bars. All right, so we did get tagged at break even here on this Falcon trade. And I think I'm going to need to do something here with my Eagle trade because I'm not liking this little poke lower. So once again, we have this sideways range. The market is now broken out. It's retesting. I'm looking for the buyers to recover. If they don't recover at this point, well then they're very likely going to try to get down here to the bottom end of the trading range. And it would probably be time for me to go. So I'll reduce my risk a little bit via my ATR stop. could even bring my stop in a little bit tighter, but I'll let it rest here on the hard edge. See, my hawk is already getting more bearish. I've got a red bar buy signal that I can try to short. I don't normally do this. I don't normally go short one signal and long the other. For instance, I'm already long on the eagle. I would tend to stay long. But I think we're going to see a little bit of a bigger retrace. If you wanted to try to ride out the swing on the eagle, then we need to keep the stop back here still. You know, if you wanted to try to ride out the swing, then that's the plan. Then we could short the hawk and still stay long on the eagle. But like I said, I think we're going to hit a sideways patch here. Good morning, Steve. Steve asks, have you used Keltner channel to set your trade stops? No. Usually what I do for my stops, I tend to go to use a fundamental price point. Namely, here I'm looking to short the NASDAQ. Stops go above the recent swing high. Why is that, you say? Well, because at this price, if the market comes in and stops me out, I can say with a great deal of certainty that I was on the wrong side of this trade. A Keltner channel is just a mathematical derivative, and there's no way to say with any reasonable certainty whether or not, you know, I got stopped prematurely or whether it was just some bad luck. Okay, hit the break even. Come on. Come on. Now, if you didn't take the failure of the red bar buy, there should be a first micro macro cross building. I'm hoping that it will hit my profit target first, though, and then give me the first micro macro cross. Oh, man. Boy, it's tough slogging. Steven's got no sound. Can I get an audio check, please? Can you guys hear me okay? And girls? Okay, thanks. All right, I'll let Steve know. There we go. Oh, Steve says, I just phased out while I was typing to him. All right, well, here we go. That signal, I think, hiccuped and hit our, oh no, we did get our profit target there. Now waiting on the first micro-macro cross. It's been a real grind today, though. My goodness. I do expect prices to drift a little bit lower before we find some support. How low? Well, next stop here, 45.80. Could get that low. I thought we were going to be more bullish, and now it's looking as though the sellers are taking control again. So everything very characteristic of a sideways market. All right, well, we'll put that on the shelf. Again, you can see why the best plan when you're sideways is to let that market get out of the zone. Let it get out, retest, and show you it wants to stay out. That's really the best way to trade a sideways market. All right, here come the buyers. It's just been that kind of day. Well, I think we're going to wrap things up here. Expect more of this sideways trading. Expect the market to continue to be choppy until we get outside of this trading range. The bulls are going to try to fight it back, though, so at that time, if I can get a bar or two in my favor, I'm going to start rolling my stops here and getting a little bit more aggressive on the bullish side. But I think we will call it a day, and we'll hook up again tomorrow, same time, same station, as they say, and we'll see what Friday's trading is going to give us. Could be interesting. All right, you guys, girls, be careful. Talk to you tomorrow.